Alan Goldwyn, nice to have you with us. We've got the AGM season kicking off very soon. We're starting with Commonwealth Bank and Telstra. We're going to see any REM strikes?
Yeah, we'll get a few. Which ones? That's always hard to say, but nothing like last year. Last year we had 17 of them. Won't be as many this year.
And those two in particular? Unlikely.
CBA, very unlikely. They didn't have a REM strike last year. It's unlikely they'll have one this year. They are paying bonuses this year where they didn't last year, but I don't think so. Telstra had a strike last year, had a big vote against them, done quite a few changes, so they'll probably be fine.
Do you think we've reached, you mentioned that large amount of strikes last year, 17 strikes. Do you think we've reached a bit of a high watermark in that level of activism, at least in terms of strikes, for the foreseeable future, for the short, medium term, following the Banking Royal Commission?
Look, yeah, because the Banking Royal Commission focused everyone's attention. So there was, so obviously there was a lot last year, much more than we've had for a number of years. Can't see it happening this year. Will it happen again next year? Will the numbers move up again? Doubt it. But then you have to look at the two-strike rule. I mean, we call it a two-strike rule. In reality, it's a one-strike. Because what happens is you have a strike, and the directors' minds get focused on it. They go to the golf club on the weekend, and their mates say, "Hey, it's a pretty dodgy company you're with," you know, and they say, "Oh, wait a second, no." So they go back and they say, "Look, you fix things up. We don't want to have that."
Yeah.
So companies go and fix it up. Those few that don't and get to that second strike the next year, what happens is nothing. Because for a big company, no one is going to spill the whole board. The problem is that the penalty is so draconian that it doesn't happen. So you have your first strike. Those few companies who don't pay any attention to it, like the cab charges of the world that used to be, they know that there's nothing to worry about because no one's going to spill the board.
Yeah.
Okay, so that brings us to the question, what is the utility of the two-strike rule then? Does it actually serve any purpose? Alan Fells was on our show not too long ago saying, well, look, it's run its race, really.
Yeah, I disagree with that because that first hit still focuses. As we said, we had 17 last year. I'm sure that all 17 of those have made changes. I mean, look at Harvey Norman. Harvey Norman is, as far as corporate governance, is one of the worst corporate governance companies going. They had a strike last year, so what have they done? They put a director on, first time in, I think it's 12, 13 years, they put a new director on. They've actually done some changes to the remuneration. They've changed things around. So even Harvey Norman goes and says, well, wait a second, we don't want the bad publicity.
Right.
So,
Alan, one of the things you do have an issue with at the moment is how regulators have changed the way that boards should think about remunerating and about bonuses.
oh, yeah, look, the Royal Commission was fantastic. So many things came out that no one thought were going to come out. So we've seen banks, what is it, ANZ has just paid about 1.3 billion, NAB 1.5 billion that they stole off people. So that was great. But what happened because of it is the regulators came under the pump. What are you doing? You aren't looking enough. So they've gone and jumped and said, oh, we've got to do something. So they come out with this idea that says that for bonuses, it should be a maximum of 50% on finance. So the two problems with that is, firstly, if a company's not making money, it's not going to pay bonuses. It's also not going to pay us shareholders dividends, and also it's not going to grow in the future. So it has to make money. And then if you talk about non-financial, what do you mean? How are you going to go and actually measure non-financial? Sometimes you can, but most of the time it's sort of, yeah, feels good, nice.
So is that why we're seeing boards really wrestling with how to structure this? And also, even if they do present something, the shareholders are still not happy.
Well, the problem is everything, again, keeps coming back to you have to do something that really makes sense. I mean, are you going to have a bonus that says if you don't charge any dead people this year, we're going to give you a bonus? Or you're going to say, hey, wait a second, charging dead people is not something you're supposed to do. So you're going to have so we would say, have a gateway, which is that you have to go and behave in certain non-financial ways before you get any bonus. So if you're not behaving right, you don't get a bonus.
All right. On the term, on dividends, which is of course so important to your members, the Treasurer has said that basically companies are perhaps worrying too much about dividends, that it should be going more into investing back in the company itself and to the economy more broadly. Your thoughts on Josh Frydenberg's call for a cut in dividends?
Look, it's interesting. Why haven't the government gone and increased the amount of money that is spent on R&D? This government has cut the amount of money that's spent on R&D. So on one side, they say the company should go and invest more in the future. I agree. They should go and be doing new things. So why isn't the government encouraging them? Instead, they're saying, no, it should be encouraged by the companies earn enough money. They don't have to give as much money to the shareholders. Let them go and spend it. Companies have to go and decide what is the best way to spend their money. And the government is really not helping them very much. All they're doing is criticizing.
Are we going to see a situation, though, with the banks? I mean, there's a lot of pressure, certainly from the banks we're hearing, on their margins with the RBA reducing the cash rate. Equally, we've got demands from across the ditch, the RBNZ, in terms of the amount of capital, extra capital that banks may have to pay. These are going to put a lot of pressure. We're going to see cuts in dividends come the results. We've got the annual general meeting of CBA, but then we've got the 3 other bank results, haven't we, at the end of the month?
Yeah, but really, we know pretty much the dividend levels, because what happens is you find out the dividend levels when the company does its annual results. So once it hits its end of the financial year, 3 months afterwards, so you know that we're not going to have a lot of hits this year, a little bit. Next year's a different story. Next year, we're going to see a lot more hits in dividends. And it's exactly as you say. There's been the squeezing of margins. There is the requirement for greater capital expenditure. I mean, what you're talking about is specifically what's happened with AMP, is that they haven't been able to go and do that sale because of New Zealand regulators came in.
That's another issue, yeah.
So what happens is that's going to go and affect dividends. The bad thing about all this for us, and I'm talking about retail shareholders are long-term shareholders. But for many of us, it's our income. It's what we know, we're retired. And so we need money. So what's going to happen, because there's going to be a cut in dividends, because interest rates are so low, it's forcing us into more risky investments, because people are saying, what am I going to do? I'm still going to make that money.
AMP, which hit record low share price this week. What should investors do, Alan?
Look, they're trying. Are they trying enough? Is it broken? I think that there is enough value in the company that it's going to survive. Whether it's going to survive as AMP or if it's going to be bought out by someone else who breaks up the parts, that's another story.